So HICSA has redefined AI, and I like this AI. You certainly need astute investments. So I have a great panel over here. Lots and lots of experience, some great stories of build-up, of difficult times, and let's begin this. So gentlemen, let me start by asking you your investment philosophy, especially when it pertains to hospitality sector. We could go whichever way. Maybe SP. I think. Okay.
No, this is there. They mic'd you. They've already mic'd you, right? Oh, they didn't? Okay.
Okay. Hello. Yeah, you can be here.
That's all. I can hear. Well, my investment philosophy is, I was just talking to him, I came from US. It's a tough environment in India to do any business when hospitality is much tougher because the cost of capital is very high. What I tell people is to take minimum debt, okay? Don't overburden the hotels or property. Put a lot of your money also. And the difficulty after spending 22 years in US came here, I had tough time going to banks and asking for money. Because one thing in their mind was, you came from US after 22 years, you have not done anything in India, how can you take such large project, 200, 300 crores and finish it? Mine is a mixed use project. It is retail office and a Marriott executive apartments. But there was someone out there who was willing to fund, and I had spent a lot of hours to convince them that it can be done. But of course, they first told me I should spend my money first, my equity 50 crores, before they start funding from the banks.
So your philosophy remains no or less debt from the bank?
Absolutely.
But otherwise you're long on hospitality, that's what you said.
I love this field.
Okay. Nipun?
So I think for us at Apollo, we've done reasonable amount of hospitality deals globally, but I think in India we've shied away so far. I think that we might be at an inflection point right now to pivot, given what's happening in the sector. Fundamentals are very different, but philosophically it's about risk and reward. Like personally and institutionally, for us investment is all about risk reward. What is the kind of risk we are expected to take on a transaction? The returns should be derived from that. So there is no number in mind. It really depends on that. And two other things I would like to add to that. One is in real estate, you end up making money on the buy. Are you making money on the buy, or are you waiting for growth to help you create value? So I think over there, again, we are value investors and looking for value on the buy, and don't mind taking contrarian bets. Contrarian is a very big theme. When people are rushing into stuff, that's not the best time to talk to us. But if people are shying away from stuff, I think it's a very good time to talk to us, because we've deployed maximum amount of capital during COVID when the world was shying away. Both at India level, we've deployed over $1.5 billion, and at a global level, the firm deployed $100 billion last year when the world was in the middle of a crisis with the war and oil and everything. So I think contrarian is a big theme and value on the buy.
Contrarian is a big theme.
Yeah.
Okay. Mehul.
Thank you. My name is Mehul Patel. I'm from Newcrestimage. We're based in US. So I'll just give you a brief background. We bought and sold about 300 hotels in US. Last year we bought 90 hotels, and we opened first ground up construction project in Vadodara, Gujarat, Courtyard by Marriott, and we're managing ourselves. We have a management company here. So our philosophy is coming back to India after 32 years. I left when I was 13, and now we're looking at India as an investment. As the country is growing, travel is booming here, And so our philosophy has always, we built 90 hotel and about 190 of them we did acquisition. So our philosophy is India is here, same 60-40, 60% of the portfolio will acquire, 40% will look at project, those are not finished, they're finished 60-70%, or looking for a capital, we would co-invest with a local developer. And so that's our philosophy here in India to grow our platform here. Our goal is to acquire 10 to 20 hotel in next 24 months. Regarding debt, we also own a bank in US, so we have a very disciplined mindset on the banking side. We would only put 50% debt day one, and then post-opening, if we see at 12-24 months hotel is performing well, then we'll go to bank and probably increase to 70%. So test the market. If you are successful, then put a debt on it, but don't put it day one and then you're over budget and many of the issues. So if you started at 50%, if you're over budget, maybe you have room to go to the bank and say, I'm over budget, help me with something to finish the project. But many times when you start at 70 and 70% LTV and your project is over cost, you cannot go to the bank and your project shut down. So our philosophy is be caution day one, have a bulletproof business plan, source and uses, that's a very important part. Put a timeline to it and really get to the finish line. So that is our success philosophy. Speed to market is everything. Anything you do, speed to market is everything.
Right, speed to market, okay. Hetan?
Yeah, so from city's perspective, what we'd love to do or we like to do, it's a new business that we have started in India. For 3 years we have been investing in real estate as a whole, as a platform. Hospitality, we have very recently cracked a deal or have done a deal, taken out a fairly large credit fund. So our philosophy for specifically hospitality is obviously we look at more completed assets, operating assets, but again we are more solution oriented where situations like taking out a credit fund and stepping into them. Like Nipun said, it's not a contrarian view that we take. We are more a senior lender, senior secured lender, but we are still a little more in between what Nipun said and what a local public sector bank or a private bank would possibly be able to do. So it'll be more solution oriented, more helping a situation out from a promoter perspective or from an asset perspective. So that is what our philosophy would be.
Right. Good to know. Mehul, maybe you can take this one. I mean, 2019, all data will say that Pro was probably the best year ever for hotels. And then 2020 and 21 were the worst year ever for hotels. And now 2023, Nipun was telling me that is the best quarter ever. So, from a very high to a very low to a very high again. What are those learnings from COVID that you have incorporated into your investment style, mantra, plan that you are always going to guide you?
So I think COVID has taught us as a company personally is we were 90% investor in hotel. We were only hotel and bank. 10% was our investment in bank. We own 100% bank, but it's when you look at dollar amount, $1 billion in hotel and 100 million in bank. So when you look at the ratio 90-10 was a big learning curve that you have to diversify. Now everybody's different, but we felt like COVID was a big wake-up call for us to diversify. So we still love hotel has our biggest investment, but we were able to diversify our investment. That's why we're here in India, we're going in Dubai. But most important, we were able to diversify our investment from real estate, banking, debt fund, alternative investment, and public equity. So we're able to invest our capital in different silos that produces equal or same return, but different profile. And if it ever happened another COVID, we're able to weather the storm much differently. And the learning was how much breathing power you have in COVID era. So we had a strong balance sheet. We had to shut down like 27 hotels for 60 days. We came out very strong. And I think location is the key. Anytime you have it. So we had the best location and we were able to sell our portfolio in 2022. Because of location, our portfolio was right portfolio that any day buyer would buy it. So anytime we buy, I think you mentioned, but you make money sometimes when you buy, but you have to, we always look at who's my buyer the day we buy. So sometimes when we buy, we look at, do I have a buyer at the exit? So that's how always been a part. Any market or any cycle, anything you own, you have to figure out who's my buyer. and we're not a long-term holder. Our hold period is 3 to 5 years. Because the market changed, market is ever changing, and the dollar is chasing different ways. So we look at always short-term investment. 3 to 5 years is our shortest investment time and that's where you realize the more IRR when you look at it.
Right.
And
so when you said when you are buying, will you only buy what everybody wants to buy? That's the high location, great location that you're talking about, or will you buy that nobody is wanting to buy because that's great value?
No, being an entrepreneur, that has given us a very good space in every aspect of it. We own from the budget motel, like in US we call it Motel 6, which is compared to maybe a Ginger here or somewhere in that part, to World of Australia. So we play the entire horizon from budget to luxury. We're not ashamed of owning anything, because end of the day we have cash register that has to make money. That's the only reason you have cash register. You don't hand out money. So our objective is we would invest in any hotel space that makes money, and our job is to buy it, fix it, sell it. That's kind of the mantra is we like to buy it, but then when we come to fix it, whether we fix the brand, whether we fix the human capital, whether we fix the operation model, our job is to go and bring our expertise and knowledge to fix and create a value, and then really monetize that to a public vehicle. And we have done a lot of M&A. We would like to buy one off and really consolidate 25 hotel portfolio and then sell to a big institution. So what we do is much different than anybody does. And I think what we have accomplished in the US, we want to replicate that is in India. And that's why we're here to invest in India now.
Right, right. Nipun, what's your opinion after you've seen this high time? As an investor, I have two questions. Number one is, where are your funds now coming from? And number two is, what kind of exposure are you ready to take on in hospitality?
No, our capital source does not change. Capital source is the same, but I think it's wider. We can play the capital stack between debt and equity. There are a few platforms which can do both, straddle between credit and equity kind of products. For focus, I think one was waiting for the data to come through. It's really strong, and I think it's going to just present its own set of opportunities. But it'll be very hard to kind of just buy the market and bid on assets if they come up. What it is doing is a lot of projects which need last mile capital to get finished. I think that's what the tide has turned, and that's the opportunity set which looks really compelling now, where you can buy it, like I said, fix it or complete it and then put it, because the fundamentally over the last 3-4 years there's very little new supply which has come in. People pushed out projects, so that could be a potential area which is looking interesting for us. Historically it was really tough to make money, just bad capital stack. The cost of debt in India is really high, and that eats into the equity return directly. So I think if you can get that value on the buy and you are fixing it in the right way in this cycle, and hopefully this cycle is not a short one, it's longer, I think that looks like a no-brainer.
So, SP, it's a question for you perhaps. You have short-term compulsions and you have a long-term requirement. How do you balance these when you make hospitality investments?
The hotel business is like an Airbus 380, okay? It requires a long runway, to take off. It's a very bulky. It's not a aircraft carrier where you can have a jet fly in and fly out in a short runway. I think this business is, you have to have a long-term vision, manage the capital well. What I have seen many hotels in India in the last 10 years I moved here is over-leveraged. If the cost of the hotel is 100 crores, in my opinion, I would put 50% of that money in, of my own money, only take less debt, so you can weather the COVID type of situation. I guess I was probably one of the few hotels, or probably the hotel in the world which was operationally break-even from day one, okay, especially during the COVID, March, April, May, June. So how did we do it? We cut a lot of costs, and one of the funniest thing was the Marriott senior Asia Pac head called me and said, how the hell did you do this? I said, man, I took over the sniffing dogs and the security guards. And he started saying, how could you take a sniffing dogs to security? I said, who the hell it will smell? You know, kiske, kya sungega wo? You know. So, so keeping, so it's a long-term play. And one other thing that we have a herd mentality. You know, herd mentality, if something is going good, everybody wants it. You know, if a farmer grows cotton in the village and is very successful, everybody wants to put a cotton. So even in hotel industry, you have to be very careful. Just because you have a piece of land, just don't go and build something, you know. I'm a big lover of mixed-use ventures. Most of my projects are mixed-use, have retail component, an office and a hotel component. So you can sell part of your space in the office, space in the retail and fund the hotel. Okay, so it's a long-term game. So in US, you know, the cost of capital is less, you know, the bank's interest rates. But here the bank interest rate and other costs are very high. So you have to be very careful. You have to be, the next generation kids who are planning to enter into this business, my advice is, you know, stay focused, you know, build slowly, ramp it up slowly. Don't try to build X number of rooms. Don't have a target. You know, I don't work on targets. You know, I'll build 5, 6 or 10 hotels in this, in next 1 to 2 years. I think you do one at a time.
Right. So I'm not going to sound like an eternal optimist over here, but is there no innovative way to bell this cat? You know, I mean, you don't want to take too much of debt. I get that. But then how do you get that much amount of equity or liquidity? That's what I think most of the investors get stuck with. I mean, you know, Mehul spoke about projects getting stuck at 60% completion stage, right? So the entire thing is, I don't think enough innovation has been done or tinkering has been done on the capital stacking. And mixed use is one way to clearly handle that appreciably. On the same lines, Nipun, any thoughts on this branded residences project or market, which seems to be taking off? I mean, there was a time when operators didn't want to touch that, saying there was too much of legal grayness around it. But now I think we've crossed that milestone.
Yeah, I think Dubai has done very well with that, more than India. I think
can India emulate that? That's a question.
So it was a matter of time that that product came to India. I think it's come. It makes a lot of sense for developers, whoever's developing it. If the opportunity exists to be able to combine the two and doing it, especially at the luxury end of the market. If you are doing just a box hotel, which is a classic budget hotel, maybe not. But even there, some of the players have tried to attempt it. But at the premium luxury end, you're seeing more and more of that. In India, people have realized that if you can't get cheap cost of debt and you don't have the equity, how do you get the capital to lower the overall risk of the project? So exactly. Everybody doesn't have large sites to do mixed use, but can you do a combination of, you know, branded residences and this? That market is likely to grow. You've not seen too much happen on that, but all the signals are there that is going to evolve and become a bigger market. I was told it's crossed $1 billion total size in the country of branded residences, and you can see it not too far from here are the Four Seasons ones. We've seen it at Bombay with the Ritz-Carlton one.
That's right.
You know, you're going to see more of these projects come up because I think what the last 10-15 years have told us is you build a great product, the operators are doing a good job, you know, you can't beat the market as an operator, you are trying to play it within a band in the market. So there's nothing else really the industry can do as a magic wand to change the profitability of the product. So if you're doing all of that, you know, what's the third source? And branded residences, especially for premium to higher end, is increasingly going to become attractive product, and you're seeing even a demand from the customer side, right? People who are looking at that. The interesting thing is operators are getting into that, and operators don't mind offering the owners on a strata basis a month. Like you can take a month for yourself and give it to us for 11 months, or something like that.
Yeah,
Those
yeah.
formulas can keep changing, but you're kind of meeting more. You're killing two birds with one stone, right? You're helping the capital structure of the hotel, but you're also creating a product for the market,
Which has a demand.
a discerning traveler wants.
Yes.
They do want that. So that's the impact of wealth creation and GDP growth and all of that. So hopefully, we are at the early stages of a much longer term trend.
Would you, today, if a project would come your way, which has a hotel and branded resi component, would you write a check?
And that cannot be the only question, right? Like
Sure,
there are so many
sure.
other peripheries around it.
Right.
But if everything else is stacking up, this will only help the case.
Right.
It's not going to bring down your metrics.
Right.
It's going to probably improve the ROE of the project intuitively.
Right.
Other things being equal, something which has this is going to be more attractive than something which is standalone.
Right.
Which also for an investor in a hotel, you own it, you build it, and then you're going to sell it after X number of years. So you're not seeing any cash flow. By doing this, you can see some cash flow.
Right.
Whether it's to the debt or to the equity, one way or the other, there's some cash coming back, which is increasing equity value. So I think it's a compulsion for the market. It's not. It's if you have the option to doing it, more and more partners, developers, owners are going to attempt it.
Right. SP, do you think one can attempt this in cities, or is it only a resort thing? A lot of this is getting developed in the resort space. I'm not sure if hospitality projects in the city are ready for it, other than Mumbai, which is Ritz-Carlton has shown us a way.
See, in Hyderabad, I have signed up a luxury hotel now.
I'm sorry, you said that
I have signed up with a brand for the luxury hotel, the combination of branded residencies also.
In Hyderabad.
In Hyderabad, in heart of high-tech city. See, the new wealth creation that has happened in this country over the last 10 years, and what I see for the next 2 decades, this particular branded residencies is going to boom. Okay, it's going to boom if you do a combination of a hotel and a branded residency, not just the residencies itself. And if you have a small component of high street retail at the bottom, would definitely do well. There is a huge demand, I feel, but the important thing is the developer should understand how they are managed, how the chains manage, it's a Marriott or a Hilton. How do they manage? What is the revenue? How do they share that revenue? Suppose if I own an apartment, when I'm not there, will they take it back into their inventory? And when they take back into the hotel inventory, how do they sell that room and how do I benefit? So a lot of expats are very interested in this model because they don't want to have own an apartment, have some maintenance issue. It's going to be a huge, and that's the next wave I see in the next 10, 15 years. Branded residencies are going to do really well.
Right. Ladies and gentlemen, needless to say, questions are more than welcome. Do bring them on. Thank you. Any play in the technology sector, open question, which you think is going to be the defining trend you would look at? Probably, Mehul, you can take it on first. In hospitality space?
I think, everybody talks about hotel, what is the evolution technology, right? And so when you talk about hospitality, the human touch has to be there. But what is the technology can ease the consumer? But same time, how do you provide experience at the same time, right? So I think the basic we have done one project in the US, which is kind of more than late, to be honest with you. So in every hotel has a generator. We didn't use a generator, we used a battery, like EV version of it.
Okay.
So it's like you put a 10 Tesla car battery, combined one by Siemens, we put that as a generator battery. So that was a new evolution. The entire hotel lighting was low voltage lighting. So all these lights are on a low voltage, like your fiber cable. So it's not run on 120 or 240 or whatever, it runs on 12 volt voltage. So our electricity in that hotel was 45% lower than traditional hotel. So it's more than LEED certification when you look at it, because the entire hotel was powered by low voltage. We also partner with LG to do all our HVAC system on low voltage, which runs on 12 volts. So that is a new evolution on that side of the fact that, and with all this technology, the guest is able to control its experience through those technology. The other evolution is elevator. When the guest is in the guest room and wants to go downstairs, he's able to control TV, drapes, everything, but able to call the elevator to saying, I'm going on the 21st floor, can the elevator come up there? And be able to, now the brand is probably incorporate, in US we look at Uber service. So if I'm leaving, how does the brand apps incorporate Uber service? So when I'm leaving, the elevator comes in, the car comes in, how does his experience become better, and then able to do more with it? But you still need the human touch of arrival experience, and I think the more is more of a host. When you come in, a front desk should be able to say, let me check you in. Instead of say, sir, are you checked in? You can go to your guest, being a host rather than being the, let me help you do all this part, let me take your passport. It's still a very backward. When you look at here, in US we're able to check in and go to a room if you're a digital key. But here, when you come here, they want the passport. It takes 10 minutes to check in, which is very not pleasant experience up front. So how does that change happen in India, right? That has to fast forward. I mean, we came in from overseas here. The the Indian immigration has cleared us. And, somehow, how do we fast forward that process here? So I think, how do you bring that unique experience here and take out the labor cost? The hotel will become a profitable here. You have to take out some old-fashioned business rule, right? Is when you check in here, so many human capital standing in the lobby, the security and all that part. It's about technology, but end of the day, you have to bring in efficiency of human capital here. And sometimes guest is saying, I'm here, tell me where my floor is and I'll go in my room. If I need something, I'll call you. Right. So I think the hotel has to change its business model to become a host and be just a nurture to say, when you need a light service, let me help you do that part. And every brand's going to be different, but that's how I see it. But end of the day, are we going to be able to take out all the human capital from the hotel? No, you're going to need that because everything is manual here. To set up a banquet, to set up, that's not going to be done by robot. Sure. The only technology interaction is when you come in and when you're checking out, we can enhance those experiences. Sure. I think the F&B has a more appetite. So if you're sitting in the lobby with IoT technology and if you order from the phone, a hotel should be able to know where you're sitting and bring the food to you instead of knowing those. So there are small touches. If you're sitting on 4th floor, order a food somewhere, IoT technology should be able to bring food to you. So there are better experiences that hotel can create in the technology space, which US is already doing it. Marriott app is able to do that IoT technology. And Hilton is also doing a great technology on that side. So I think those two legend companies are bringing those technology and we will see that evolution. But I think India, we traveled last 12 days and we had very unique experiences hotel to hotel and we kind of saying, we wish the hotel would adapt here, different culture that makes the experiences unique, but you still need the soft touch of human capital.
You still need the soft touch of human capital. SP, you are a very technology connected entrepreneur. Is there an opportunity that you see in the technology field which can markedly change the landscape of hospitality investment, or is it still going to be a largely brick and mortar sector?
I think technology play, the systems become much faster, reservation systems, check-in, check-out. I think it's still human intense industry, and especially in India, the service levels are so high. This is the best country, in my opinion, where the hotel services are really good, okay, because you have too many people, do it, but in US you don't find that. Because I'm from a technology background, I'm a software guy, I build large enterprise systems, accept the processes, and bringing efficiency into your operations is what clicks, so you have to watch those expenses, your human resource ratio to your rooms ratio, your housekeeping to this. In US, we monitor very well. I mean, in US, we say that, each housekeeper should clean the room in 25, 30 minutes, okay? And if the room is clean, and if she's clocking in more hours, then we know where it's happening. So managing all of that is very critical. In India, it's a different ball game because here you're not paid hourly basis, you're on a salary basis, but still having that, bringing those operational efficiencies are very, very critical. And COVID taught us a lot, okay? Technology is one issue, but I don't see, where you don't have a human intervention, you come in, you just swipe your credit card becomes your key for your room, and then you check out, everything happens. It's not going to be happening at that fast. I mean, it's about the other efficiencies that you bring. Technology will definitely play a role of, bookings.
But nothing has crossed your eyes that you've invested in or you're ready to invest?
I don't see that happening. I don't see robots going and cleaning rooms and all that stuff. It's not going to happen.
No. Okay. Okay. I think we have some questions, and it'll be great to have those questions over here on this side as well, on the screen. Maybe I can read it from over here. Okay, let's take this first and second together. What is your ROCE or IRR ROCE or IRR that will make you look at a project, that will make you sign up a project? Hetan.
Well, ROCE or IRR is a secondary aspect.
Yield.
First is, yield or anything, it obviously depends on, how deep the situation is, how difficult the situation is from a financing perspective. More importantly, when we look at hospitality asset, and when we look at any other real estate asset, hospitality is very complex, right, in lot many ways. If I really have to finance a simple office asset, I will look at lease rentals for, so many years, and I'm done with that. That's a simple way to kind of assess what kind of cash flow it is going to throw for a number of years. Hospitality, there are a whole lot of other parameters of, obviously location is one, how the hotel has performed, or how it is that vicinity is expected to perform.
But isn't that all built into the cash flows and hence the IRR or the...
It is, and more importantly, I think what has happened in today's market or today's date, why we have got, 600 people here evaluating or, wanting to interact with the whole industry is because I think you can now see that some amount of, green shoots, if you say that, or, some amount of positivity that is built up. Where at least, if I'm reading somewhere, for last 10 years, we have never really seen hotels throw an EBITDA of 35% and over, right?
Right.
10 years ago, 17, 20%, 25% EBITDA should be said as, good EBITDA. As in, I'm talking about EBITDA margin. So, first and foremost, how sustainable or how consistent that is. When you asked about technology, that technology plus the human power, it should not really impact the overall margin, right? Because all said and done, how sustainable is that margin? How effectively the operations of those hotels or the portfolio are being run? I think those are the key, key constraints.
But you still have to give me a number. I would like to know that.
Again, what I have financed, I am a senior lender, so I will anyway be in the range of, 8% to 12% kind of, zone, depending on where that structure really lies. So if it's really stress situation, then it will be obviously mid to kind of, low teens kind of structure. But if it is a plain vanilla financing, it will be in, somewhere in the single digits.
Single digits, okay. Mehul, you can answer it in two parts, for India and for back in the US.
Yeah, US, I think we underwrite unlevered 11, 12. That's net, gross IRR in that sense would be 20s. I think we have done more than 20% average. And, we have 5 silos, so we look at which one would produce. If I have to put that in hotel, and if it doesn't earn anything more than 20, we would look at different silos. Public equities can, allow us to get that. So I think US is pretty profound that you could get 20 IRR, no issues any given day. India, I think the banking system is a challenge because today when you do a project, you get only 10 to 12 year amortization.
That's
so
right.
There is no IRR in first 10, 12 years. It's like you're working for the bank for 10 years.
That's true. That's what most of the owners will tell you here.
So that's where the trouble that I see as investment coming from US is like, we get a US 25-year amortization. When we build something, we would tell the bank, we want a 48 months interest only. So you have a breathing room. Then we have a 25-year amortization, even though we would refinance the loan in years 5 to 7 year and put a new debt on it. But it's a kind of a gradual pace, where India is, you go day one, it's like a peak. 10 years is your amortization. You only get 50, 60, 65% debt, 2/3, 1/3, or depending on the bank. So begin the first 10 years, the hotel owner hardly makes any cash flow based on, you may make a little bit, but that return is kind of minimal. You rather put a fixed CD here in India and be patient, and you can take that interest and enjoy all luxury hotel you want. That's how we see it. Or buy a stock of a REIT or any publicly traded REIT, and you'll make more money rather than doing an investment. So I think the fundamental challenge is the banking system that ties to the return. And banks feel safer that I would get my money first, but the bank is putting that owner in the trouble to begin with, because he's underwriting that first 10 years, every money you make, give it to me. That's how the banking system. We also own in bank in America, so we look at it as how does the owner become successful? It's a true partnership between bank and the borrower. So I think the Indian system, I'm here to say what the facts is, right? So the Indian banking system has to change, because you cannot sustain 10 year. When you borrow 300 CR, 500 CR, 1000 CR, how do you underwrite 10-year amortization? It's not sustainable. So I think that banking system has to change in order to grow, and I think that's where travel and tourism and the government has to look at banking. How do you make it easier to business? And hotel is also very heavy capital intensive. So in US, the standard is 7, 14, 20-year renovation cycle. So here the hotel hasn't seen a renovation cycle, because all these hotels were built in last 5, 10 years. Now hotel is getting older. So when the hotel is getting older, if you don't put the capital, you are kind of the old club. People would say, why would I stay in an older hotel? So you also need a capital. And so, that's how the banking system have to change a little bit and be flexible of become a successful.
So would you seek a higher IRR from an Indian project, or a lower, or the same?
If I don't get a higher, why would I do that? if I'm going to make only 8% here, I'd rather put it in CD and enjoy my life around the world. Why would I want to do that? But I think the return has to optimize in a many different way, right? You mentioned you could do branded residency and the cash flow come in early. You could do office, you could do certain things, but not every project you could do that. It's hard to do all, mixed use projects. So we look at standalone project. If I'm investing in hotel, that project has to make money. I don't want to borrow from the branded residence in an office, because that's not a business model. You're kind of making on other project and paying the hotel. Why would you do that? So we kind of look at standalone investment. Each business has to make sense. Otherwise, why would you invest? So look, I think there is a way to make money, but you have to incentivize. And I think government has to figure out other incentivized project to get the hotel project up and going. I think the banking has to change.
Yeah, that's a larger discussion.
If I can give a quick reaction to, because being a banker, I should represent the banking fraternity.
Yeah.
Hopefully.
So Hetan, maybe you could start with 20-year amortization.
No, so I think you put it in a right way, and what I was trying to say earlier was the whole uncertainty which has built up in over the last 10, 12 years, where hospitality assets have not really performed, right? Like Nipun also highlighted that hospitality has not returned money, and likewise for lender also. If you really go and see amount of defaulted assets that you see today, you yourself are looking at so many assets are available. That's the reason that the uncertainty has just generally sinked in. So as a lender, people are more concerned about to put in that money and whether that money will be back. Like you also said that whether I have a buyer. If I put in a hospitality asset, there are not too many banks who are going to invest in a hospitality asset, even if it's a performing asset. So unfortunately, the discipline has to really be built in. Like if people like you come in and build up that discipline in the whole operations, and that EBITDA margin, that there is certainty of the lender's money going to be returned back, then obviously, the banking sector will also start looking at those assets in a different way.
It's a full cycle.
It's a full cycle.
Nipun, your number? Any number?
No, you can take a number. I think it has to be in the late teens, early 20s if you are looking at ROE, pure equity returns in India, and it's not for hotels. You could be doing office, you could be doing residential, you could be doing data centers, you could be doing logistics. Because the government of India is borrowing at 7.5%.
That's right.
Right? So that's where the game starts. And then you keep adding based on your risk perception about the asset class and stage, etc., etc. So I think anything equity in India, whether it's private equity, real estate related equity, most investors would be looking at a 2 in front of the number for ROE game. The ROC is function of how you've kind of organized it, but historically it's not created value, and debt has earned more return than equity for hotels, because you eat up, if you finance construction at 13-14%, if that is the rate at what, equity is not struggled to generate that in India. And that's why you've not seen capital flow in from institutional investors in a meaningful manner in the sector. Whereas, take some of the other asset classes within real estate, whether I've named a few of them, they've attracted a lot more dollars, whether it's equity or credit, doesn't matter, like broadly. But I think this cycle, the sense one is getting is that the fundamentals are better.
Yes.
Just the fundamentals. Will the RevPAR sustain and keep growing at a better pace to give you that cushion that you need to be able to, because you want to get rid of that debt fast. If you're going to work for the lender for 10 years, I can tell you he's not going to do too much in this country. So if you can get rid of that debt in 5 years, you'll probably see a lot more happening there. But the fundamentals will end up probably playing a better role this time around than in the previous cycle. The last 10 years has been brutal for the sector in terms of investment.
That's
but
right.
the next at least 5 look definitely brighter.
Yeah, I mean, various data points that we see clearly tell you that there is no supply. I mean, there is very, very less amount of supply which is coming in. Hotels are doing great rates right now, and that's reflective of the supply-demand mismatch, this time for the right side, not the wrong side.
Yeah, you can get hotels in Southeast Asia at half the price of the resort destinations in India.
That is right.
So hopefully, there's money to be made now.
That's right. I think individual investors have also kind of mastered the art. Some of them are opening or creating very small hotels small resorts where the land cost is less, where they have a control of the project. They don't need to go to the bank unless it's just very small amount. So I think people are doing everything in their own control. Mixed use development, serviced residences. I mean, this is all some way to beat the...
Take the 5 biggest players in the country.
Huh?
Take the 5 biggest operators in the country.
That's right.
Not just operators, owners also.
Sure.
How much capital have they collectively invested in
Yes.
the sector, including the Taj Group or Oberoi Group or other? Very little. There's very little new money which has really gone into it. And the corollary of that is that it's resulted in a miniaturization of the sector. Miniaturization meaning you've had the small boutique stuff which is filling in, what you were referring to.
Yeah.
And doing it with private capital. There's no institutional capital.
That's right.
Markets in South, or take holiday market, and especially the second home destinations of India is all private capital, family office capital flirting around, trying to kind of make it work. So institutional capital has got burned, not just global funds, but even domestic capital which got into it in any meaningful manner. And that's why you've seen the pullback even from large domestic investors who historically had attempted it. But I think that cycle's turning. Hopefully this time it's better, and I hope people can make money in the sector.
At the private equity fund level, and you are the best person to answer that, one of the major issue is that you have a fund which has a cycle of 7-8 years, but you have a hotel, like all of us are agreeing, which for the first 10 years is just serving its bankers, etc., which actually needs 25 years. So that mismatch of timing is going to happen any which way. So I think that's why the institutional capital on the private equity side of it has not tapped into hospitality that well.
Yeah, it stacks pretty low because residential cash flows are much faster, office leasing cash flows are much faster. I think it's just relative positioning vis-a-vis other asset classes, including logistics, data center, all of that. Just the relative positioning in that was low. I think this time the call is that the fundamental, because there's been no new supply and RevPARs are there to sustain, and the fundamental metrics will sustain for the next few years, which could move the needle and start attracting it. But and this cycle is hopefully different than the last cycle.
So we've scared you enough, Mehul, right? You still want to invest in India?
Look, we're here to invest, but I think there's 2-3 fundamental the hoteliers are here are not thinking. One is the construction cost. I think people feel like the land is the most expensive item, but we built a hotel courtyard was at 1800 rupees per square foot. Today the same hotel if we were to build is 2800 rupees. So people are not thinking that cost of inflation is going up, but what level? I think that's the one scary factor that everybody's like, I'm going to build a hotel. That's good, but they're not thinking that what I build last hotel to next one, there is a delta of 1000 rupees per construction cost. I mean, I'm just using those number. It's not the same number. Everybody thinks when I build the last one, I'm going to build it at the same price. That music was gone long time in the world, not just in India. So I think people are underestimating cost of construction. That's one item that I'm seeing. And manpower is also, people are, after post-COVID, people have thought different business model or business work their career. People are saying, I was a construction worker, I could be at home doing a Uber, doing a food delivery, or I could be working a call center. I don't have to go to those hard working places. So the labor challenge has gone and now people would have to pay more for that. Obviously the labor and material is continue to go up. No one has, like US, we look at logistics issue. Number one issue in US is logistics. We were depending on China to get all our FF&E. Now US has probably billions of dollar renovation that needed. We cannot get money, we cannot buy those products because they're too expensive and time it takes to get it. And when it comes, we don't have a labor to finish it. So we have one major problem that has 3-4 issues related to that no one is thinking about it, right? So I think India would face the same issues what China faces. We're going to overbuild hotel here. Everybody's boom here, let's go build. And the issues we're dealing with, high interest rate costs, low 10-year amortization, cost of construction is going up, and the consumer expectation is needs and wants. Consumer is like, I have needs and wants. And the brand has to balance that. What do we give it to consumer at what cost, right? Because the rates, if they're not going up and if you're still offering the same product and service that you offer 5 years ago and you haven't changed your business model, you would not survive. So I think we are bringing a fundamental discipline in India. If we invest, we would play within our box to say, yes, we're investing, but we have a disciplined business model that will make money, and this is the way we play game. It doesn't matter what the fundamentals are, but we have a disciplined model that will play the game. But there's so many issues we're dealing with the hotel industry that people are not thinking. Everybody's like, I want to build, and everybody's lining up. Yeah. But I think within time we will have oversupply. And when you have oversupply, people haven't learned a pricing strategy here. Everybody's like, 8,000 rupees, 10,000 rupees, 20,000 rupees. But end of the day, we don't have a product differentiate. We're not focusing a lot of the stuff on it. And the last item, what I learned in India last 12 days traveling is, what does consumer is looking for? Everybody's building luxury. I want to build luxury. I want to build this. But is the consumer really want that, or consumer looking for something, right? When you look at 10 years ago, the travelers was luxury, but today, the next generation, 5 years from today, 10 years from today, your daughter, your son, what are their traveler preference, right? Those are changing. Like US, we gone through that. It's the lifestyle, it's a light luxury, it's a unique experience, right? We have a brand autograph collection, unique experience. It's not a brand, there's no Marriott. In India, everybody calls, I'm staying at the Marriott. And I asked, which Marriott? Is it Courtyard, JW? There's like, I'm only staying at Marriott. So some philosophy we learned here is people just tagline or Hilton. When you say Hampton or Hilton Garden, they're like, I'm staying at the Hilton. So some of the item we learned here. So I think the product differentiate will come in the play in India. So there is so much things has to be clarified, and time will tell what have we done on it, right? When we build so many of them, in fast reality will check what happened. And so when we talk about 1.4 billion population, they're all not traveling. 1.4 is not traveling. That's a big number, but when you dissect those numbers, every category has a tier sector. So you have to look at who's your travel business. Obviously the travel is booming, everybody wants to experience, and everybody's wallet is rising, right? Everybody's rising to that $1 million club. But you have to make sure you're building the right product in the right market. Sure. Don't just go for something that everybody's building.
Sure. No, sure. I think India is really positioned well. The amount of infrastructure investment that's happening, the connectivity, the airports, Earlier, if I have to go to Varanasi, I have to think twice because There was no direct flight from Hyderabad. I have to go to Delhi. Then from there I fly there. Now I go there. Where do I stay? So now all the tier 2 cities, and especially religious tourism, it's going to be huge in India, because this highways connection, airports that are getting built. So we did a study. I said, where is the next growth for the hotel industry? It doesn't have to be luxury hotels in all these religious places like Madurai and all that. You look at 80 rooms, 100 room hotels, you know.
So 80 rooms, 100 rooms in tier 3 cities.
Tier 3, tier 2, and especially the religious places.
Religious.
Right.
So
Rishikesh.
you're touching upon the next question I thought I'll ask for the audiences, which is that where do you see an opportunity to invest in India if you had to put in fresh dollar or rupee?
I tell you, the second tier 2 cities, like for example, Vizag, okay? Vizag is a good location. But even the tier 2 cities, the land cost is becoming expensive, okay? So you have to find, say like in Vizag, you know, we are trying to find some piece of land. It's anywhere from 8 crores to 20 crores an acre. So, you know, and probably in Dallas, in Atlanta, we can find a beautiful place in downtown Atlanta, you know, for much cheaper. So the cost of land has to be manageable. So tier 2 cities, in especially even in Telangana, you know, the Warangal, the Nizambads of the districts have potential.
Yeah, I mean, I'm not sure if Prashant is sitting over here, but I mean, his family has created a product which is a shopping center on the ground floor and a hotel on top.
Yeah.
It's a tier 3
Kurnool,
market.
yeah, Kurnool is one, Tirupati, Chittor, because has a huge food park near Chittor. So the tier 2 cities have huge potential. My bet is going to be on the religious tourism places.
Okay.
I feel both international tourism and this, even Tirupati, there's a huge demand. We just went after a hotel in Tirupati. We didn't get it, but we are looking for a Tirupati also. If we build a decent sized convention for marriages, a lot of weddings happen there.
Sure.
But the duration stay in Tirupati is about on a day or two, mostly. Okay. So those places are, I feel there's a huge potential. And make in India, like FF&E furniture, in the US, we all used to depend on China. Now in India, we have several factories in Udaipur, Delhi. You know, I was very impressed with their factory in Udaipur. It's almost 4 lakh square foot. He's manufacturing furniture for top hotels. So the cost advantage that we used to have with China is no longer a play now. But however, the finished product, I can tell you, we are producing pretty good. I think this Make in India program that started a few years back, the Prime Minister started, is an excellent example. And I think these Make in India, the infrastructure investment that's happening in India, I think tourism is going to boom, and there is going to be demand for budget hotels. You know, as he said, what brand you have? I have Marriott. Which Marriott? You know, so Marriott has 30 brands under it. You know, so
okay. Nipun, can I get your where's your investment going to come to?
No, personally, I agree with the thesis around religious tourism. We love our God and goddesses. You know, more and more people want to go and pray and ask for their growth, family growth. So that personal level, I get it, why it's a big theme, and you know why it's a big opportunity for entrepreneurs to go and tap into it. Institutionally, very tough to execute for funds who have life cycles of say 5 to 8, 10 years. This needs longer term, patient aggregation, you know, over a long period of time. So I think institutional capital for all. And it's been one of the features of investing in India across asset classes. Institutional capital, whether domestic or global, is restricted to the top 6, 7 cities.
That's fine.
It's really because of the size and scale. One of the things we come with is baggage. The fund size is large. You can't do $10 million transactions. You need larger transactions to be able to justify, etc. So maybe that story is. It's definitely an opportunity for entrepreneurs and investors, institutional investors, because of scale and opportunities. I think we've seen that in office and all the other asset classes with hard assets.
Absolutely.
It probably the focus will remain on the. You can add a few resort destinations to it, but I think it needs scale. Like one-off, just going and doing a one-off hotel somewhere doesn't make too much sense.
Sure.
But so if things can offer scale, and there's a lot of capital still needed to restructure several broken, not hotels, the hotels are good, but they're broken capital structures. So I think we think that there are several platforms and assets that just needs restructuring capital, both debt and equity, to come and solve the legacy problem of the past. So I think institutional capital will be more focused on that side.
Mehul, your choice of the new areas where you would invest. You're new to India, but still, what else? What has caught your eye?
I think for last 12 days we travel. We believe in the religious sector. We believe in city center, tier 2 city, tier 3 city. I think we like to play in every kind of segment.
Okay.
Because there is a travelers here who would be on all that. Obviously, we're looking for different experiential, whether destination, whether glamping or some whatnot. So I think we're kind of mix the portfolio in a different way. We like business, we like leisure aspect of it. So we have done it all in US, so we're kind of replicate the same business model is. Don't just focus in one, that is our philosophy. We like budget, select service, luxury, soft luxury, what I call it, or lifestyle.
Right.
And so all that era space give you an ultimatum to go up and down on it.
India has seduced you.
Right, right. Hetan, any thoughts? You may not lend necessarily to somebody, but any opportunities?
From a lending perspective, again, a single asset lending is that much more difficult vis-a-vis a portfolio lending. I think, I mean, all these guys also said in the same way from equity perspective, but even from a lender's perspective, when there is diversification, risk is obviously distributed, and that becomes more amenable, you know, for us to kind of evaluate that kind of proposal. Single asset, then, you know, a whole lot of story around that single asset will have to be good location and, you know, various other aspects, which the asset really, you know, can perform. So, I mean, my case would be really if there is a portfolio, whether it is...
Portfolio over single asset. Okay, we have very less time left. I want to just ask a question. Give me a short answer so that there is enough time for everybody to go around. Which is that one investment that you missed or that you regret missing? So give me a quick sense of that investment and what would that have been today? We could start with Nipun, you.
All were good misses. All were good misses. I think you would have lost money wherever you would have invested. You have all the data, more than us, probably. I don't think hospitality was a miss.
Okay.
People who gave it a miss, I think saved a lot of heartburn. Should you miss it the next time around? Maybe not. So I think you have to change your view based on the data. Okay. And I think the data is telling us take a closer look.
Okay.
So I don't think regret missing anything.
All right. Mehul?
No regrets. We always look forward. There is no looking back. What happened past, you can't change it. So our philosophy is look for tomorrow, and the future is bright. So we just focus on the future.
SP?
I also have no regrets. I think every time there's an opportunity, okay, so I don't regret it. I missed buying this land. I should have way back bought it. I think there's always an opportunity to buy it. I don't regret it all. So every day I see there's a new opportunity coming, and I'm telling you, this country has phenomenal opportunity in this country to do many things, you know. So I think we should view that as a this thing and move forward.
Okay. I think we are almost up with our time. Thank you, panelists, and thank you, ladies and gentlemen, for spending this time with us. Thank you. Thank you.